Mhm. Yeah, so it's true that the yen is increasingly giving pressure on the inflation. That is very clear. But at the same time, BOJ has forward guidance, and I think they are saying, they want to generate demand-based inflation, and then we don't see any sign of, inflation caused by demand side. It's all purely supply side. So BOJ knows inflation will start to slow down sometime next year. So I mean, unless they change forward guidance, I think BOJ have to maintain current policy to maintain credibility.
That was going to be my question, actually. Is it a case of, you said at the right at the beginning that the BOJ didn't have much choice, but even if they did have choice, is it a credibility issue because they've doubled down for so long on this policy that suddenly to change course might actually make the market feel that the BOJ has lost credibility and lost control?
I see. Yeah, so the foreign market participants are trying to challenge by BOJ's policy. So in the JGB future market, we saw a lot of short selling, and this week BOJ is purchasing lots of JGB. So there's a credibility in many ways, but BOJ is not responsible for coping with yen's depreciation. That is a Ministry of Finance job. So it's a bit strange for BOJ to say, okay, to get rid of yen's depreciation, we have to increase the interest rate. And also, when the Fed is trying to raise interest rates toward above 4%, tiny interest pickup doesn't really help for the yen to appreciate. So I think, looking at the underlying inflation dynamics, it's very weak. Demand is still weak, and we have to see a recovery. And also in Japan, a lot of mortgage is based on flexible interest rate. So once BOJ get rid of current policy, then people start to think, okay, interest rate will go up, and that may undermine economic recoveries.